Welcome to today's video, where we'll uncover some of the most commonly missed tax deductions. Whether you're a seasoned taxpayer or new to filing, this guide will help you save money and reduce your tax liability effectively. Let's dive into the details and make sure you're not leaving money on the table. Overview of tax deductions. Tax deductions are powerful tools that can significantly reduce your taxable income, thereby lowering the amount you owe in taxes or increasing your refund. Essentially, these deductions are expenses that the IRS allows taxpayers to subtract from their gross income before calculating the amount of tax owed. Common deductions include mortgage interest, state and local taxes, and charitable contributions. But there are many others, some of which you might not be fully aware of. It's crucial to understand these because properly leveraging them can lead to substantial savings. In today's video, we'll explore a variety of tax deductions, focusing on both well-known options and some that are often overlooked. Our goal is to ensure you're not paying more in taxes than you need to, equipping you with the knowledge to make informed decisions when filing your taxes. Work-related deductions. For many taxpayers, work-related expenses form a substantial part of their potential deductions. If you're employed, you might be able to deduct certain unreimbursed business expenses. These can include travel costs, professional dues, and even the expense of maintaining a home office if you meet specific IRS criteria. For self-employed individuals, the scope broadens even further. You can deduct the cost of your home office based on the percentage of your home used for business, along with expenses for business travel, the cost of business equipment, and more. It's important to keep detailed records and receipts to substantiate these expenses. Understanding and claiming these deductions properly not only reduces your taxable income, but also maximizes your earnings by minimizing your tax liability. This segment aims to unpack these deductions, helping you navigate the complexities of what is and isn't allowable under IRS rules. Health expenses. Health-related expenses can also provide significant tax deductions, which many taxpayers might not fully utilize. These deductions include health insurance premiums, especially if you are self-employed, and out-of-pocket medical expenses. To claim these deductions, your total medical expenses need to exceed 7.5% of your adjusted gross income, AGI. Eligible expenses can range from doctor's appointments and surgical procedures to preventative care and dental treatments. Additionally, if you've installed health-related home improvements, such as ramps or lifts for medical reasons, these costs might be deductible as well. Keeping detailed records of all health-related expenses throughout the year is crucial to make the most of these deductions. By understanding what constitutes a deductible health expense and how to properly claim it, you can potentially lower your tax obligations significantly. This part of our guide will help clarify which health expenses qualify and how to meticulously track and claim them on your tax return. Charitable contributions. Charitable contributions are another area where taxpayers can find deductions that not only benefit them at tax time, but also support the causes they care about. These deductions can include cash donations made to qualified nonprofit organizations, as well as donations of goods such as clothing, furniture, and even vehicles. The IRS requires that you keep a record of all charitable contributions, including receipts or a detailed log for non-cash donations showing the item's condition and value. Additionally, for any single charitable donation of $250 or more, you must obtain and keep a written acknowledgement from the charity. Importantly, your charitable deductions cannot exceed a certain percentage of your adjusted gross income, depending on the type of charity and the nature of the donation. This segment will guide you through how to document your donations properly and ensure that you receive the maximum possible deduction, thus making your charitable giving even more rewarding. Educational expenses. Tax deductions for educational expenses are designed to encourage personal development and career advancement. These deductions can cover a wide array of costs, including tuition, fees, books, and supplies necessary for schooling or training. Importantly, these costs must be related to maintaining or improving your job skills or required by your employer or the law to keep your salary, status, or job. Some deductions also apply to student loan interest payments, making this an especially valuable deduction for recent graduates or those continuing their education while repaying student debt. For those with dependents, the tuition and fees deduction can apply to your dependents' education expenses as well, potentially reducing the amount of taxable income significantly. This segment aims to provide a thorough understanding of which educational expenses are deductible, how to claim them, and the records you need to keep to substantiate your claims, ensuring that you or your dependents' investment in education translates into tax time savings. Energy efficiency improvements. Investing in energy efficiency improvements for your home is not only good for the environment, but can also be beneficial at tax time. The IRS offers several tax credits for homeowners who make qualifying energy-efficient upgrades. These credits can apply to a range of improvements, including the installation of solar panels, solar water heaters, geothermal heat pumps, and wind turbines. Additionally, smaller upgrades like adding insulation, energy-efficient windows, and certain high-efficiency heating and cooling systems may also qualify for credits. These credits typically cover a percentage of the cost of purchasing and installing these systems, with potentially significant upper limits or even no caps for certain types of improvements. Understanding these opportunities can lead to substantial tax savings and contribute to long-term reductions in your utility costs. This segment will explore how to qualify for these credits, document your improvements, and effectively claim them on your tax return. Investment expenses. For individuals who invest, certain expenses related to managing investments can be deductible. This can include fees paid for financial advice, costs associated with investment management, and expenses for legal and accounting services related directly to managing investments. However, it's important to note that with the Tax Cuts and Jobs Act, many miscellaneous itemized deductions, including investment expenses, have been suspended through 2025 for individual taxpayers. Before this suspension, taxpayers could deduct these expenses to the extent that they exceeded 2% of their adjusted gross income. Although these deductions are currently limited, understanding what was previously deductible can help you prepare for potential future tax planning if these deductions are reinstated. This part of the video will clarify which investment-related expenses were deductible, how to keep track of these expenses, and strategies for maximizing tax efficiency within your investment portfolio. Uncommon deductions. There are several lesser-known tax deductions that many taxpayers overlook each year, potentially leaving money on the table. These can range from deductions for gambling losses, which are allowed as far as they offset gambling winnings, to certain job search expenses in your current profession, though this deduction is currently suspended under recent tax law changes. Another uncommon deduction is for hobby expenses, which under specific circumstances, if the hobby generates income, you might be able to deduct expenses up to the amount of income the hobby generates, though not exceeding it. Additionally, taxpayers who have experienced a theft or some types of casualty losses, like from natural disasters, and aren't reimbursed by insurance, can claim a deduction for these losses. There are strict criteria and documentation requirements for these, including the need for the event to be federally declared as a disaster in the case of casualty losses. This segment will delve into these unusual deduction opportunities, explaining the qualifications, limitations, and the proper way to claim them, ensuring you are maximizing your tax return without overlooking these potential savings. Thanks for watching. If you found this guide helpful, please like, subscribe, and share this video to help others maximize their tax savings too. Remember, every deduction counts when it's time to file your taxes. Stay tuned for more insightful content, and happy filing!